All right, welcome fans to market structure recap. So like you can see, we are going to be having a structure recap. Um, I've said it over and over again that structure is the bedrock of everything you want to do. Like that's the bedrock. So time and again, we want to be able to go through market structure and get to see how the market really works. You get now? Because that's what is market structure, how the market really works. Yeah, so um all right, let's talk about we have from the other videos and materials we've talked about the types of structure. I used to like saying that generally we have two types. Either the market is bullish, uptrending, or the market is bearish. Okay, Mr. Eze, welcome, sir.
Yeah, thank you, sir. I appreciate you, sir.
Yeah, Mr. Samene, welcome. I think he's on the call now. So, two types, it's either we are bullish or we are bearish. So, when we are bullish, we want to be looking for buy opportunities more. It's not that there will not be sell opportunities, they'll be there, but it's more safer to look for bullish opportunities when we are bullish. When we are bearish, we want to look for sell opportunities. So the price will give more selling opportunities as the expansion. While the retracement can just be little buy opportunities expansion. Then retracement, it comes back to this last lows and then gives us another lower low. So we want to look for only selling opportunities more at all of these lower highs. Then we can take price to this level, take price to this level. That's just that for bearish. Then if we are bullish, we want to always come and look for buy opportunities anytime. We want price to retrace back, then we get on the buy at this higher low to give us another higher high, taking profit from here, just in that order. That's what market will do. And this must be identified from a higher time frame. We have said it over and over again. Buy opportunities at these levels, buy opportunities at this level, buy opportunities at this level because we are bullish. Then you want to take price to this level, take profit. So if you get in here, you can take profit from the left. Get in here, you want to take profit from the left. Just the way it is with the selling opportunities. So now I want to look at on the lower time frame, every bullish movement, the retracement is always going to be bearish. The retracement to be bearish. The retracement to be bearish. But remember, we are bullish, but retracement is bearish. So for every bullish move, it begins with a bearish formation. Then it changes back to a bullish formation. It changes back to a bullish formation. If price gets to the top and wants to start retracing, it will give you a bearish formation for the retracement. It start retracing like this. Then remember, this is where you want to buy, and then price gets to this level, price will change to a bullish formation and price will start going higher. So this is how the market keeps moving at every phase. So whether the market is stalled at a particular position and we say it's consolidating and all of that, the fact remains that it is still buying and selling. It's still giving you buy opportunities and selling opportunities. You get it now? That's what price does every time. It's either buying or selling. Yeah, in our normal market, there is what we call window shopping. You just go and get prices of items so that when you have cash, you get that and you just want to know the price, and then when you have money, you can go and buy it, and to avoid embarrassment. And then you are pricing like market woman. So sometimes we window shop, but this is not the normal regular market. Price is doing just two things: either it's bullish or it's bearish. Yeah, all the time. And I've said it over and over again. If you go back to all my videos, you would want to identify this only on higher time frames. Only on higher time frames. And higher time frames, this is synthetic. We just have daily here and 4 hours. So we use that for our higher time frames. Daily, 4 hours. And then you come to currency, we have monthly time frames, 12 months, 6 months, 3 months, weekly, and all of that. So you want to be able to spot this on the most highest time frame. And then you start scaling down gradually to see how you can get an entry. So market structure recap, we have two forms: bullish and bearishness. And for every bullish move, it begins with a bearish retracement. Bearish retracement. I'll take you through the charts so that we can see what the chart looks like. All right, I'd like to push this down. So before price will move from a bullish momentum to a bearish momentum, assuming price is giving you this bullish formation, before price will move and begin to give you a bearish formation, most at times price will consolidate, because market is meant to run on liquidity. What's liquidity? Entries, volumes in the market, where previous buyers are, where previous sellers are. So price sometimes can give you something like this, and then price can break down. Then we'll have a break in market structure, which I either break of structure BMS or BOS, whichever one. So sometimes price can just begin to stall within a particular angle, and then it changes direction. Price begins to go in a bearish formation. But before this turn will happen, this can take many days. But you want to follow the real structure of the market. This was a low, this was a high. This was a higher low. After this higher high has been betted, price gave us this low and betted another higher high, gave us a higher low. This is the retracement. This retracement is going to be a sell momentum, but it's not going to break here because this is your last structural higher low. Price gave this higher low, went, created a higher high, higher than this previous high. Price created a higher low, created another higher high. This is a valid higher low because this higher high closed above this. So when price comes here, price go up, this becomes a valid higher high also. And instead of giving us a higher low, price closed below. This is what is now referred to as a break in market structure. So you see We annotate it by just maybe BMS, break in market structure. What does it mean? Price broke below the previous structural point. This was a structural higher low. Now price has closed below this structural point. It becomes a break in market structure. Now when price breaks structure to the downside, price will not just run away. Yes, price will not just run away. No. Even if price is going to run away, that's smart money. They might decide to just run off. But you don't want to just get on the trade. You want to wait for this formation. This is the formation you must wait for. What's the formation? Price giving you breaking and price breaks. Let me see if I can send this to back. Okay. All right, let me send that to back. Price breaking below the structural point and price goes back in to give you a retest. Once you see this model formation, then it's appropriate before you get in on the trade. You don't want to have price breaking this place, you just enter into this place and then you just want to sell from here. No, this stop loss is wide. All right, so you want to allow price to clearly break, then you wait for price. When price comes back up here, when price comes back up here, then you wait for it to come. You get in on the trade. On possibly the other block, the institutional candle or smart money cube, whatever other thing that are here to play, then you can now get in here, look for your entry, maybe on lower time frame, and then you can now start taking profits from all of these structural points. You can take profit from here, you can take profit from here, you can take profit from here. You see, you just keep taking profit from the structural points to the left. This is how we follow our trades. This is how we follow our trades. So you have to wait for this model. You have to be patient. Allow this model to form. Let the model form completely, and then you can get in on the trade. So I'm going to also show you from the chart how we can just see examples of this. Now price is bearish. It simply means price has changed from this formation, bullish formation. Now price is bearish. Now so long price is bearish, this is the formation you are going to continue to see. This becomes your structural points where you'll be waiting for price. If price comes, give you this lower high, price gives us a lower low, price gives a lower high, price makes another lower low, price retraces back, lower high, expands to give you another lower low. So what it then means that you want to be buying, you want to be selling only at the previous lower highs. When price makes this lower low, price retraces, wait for price here, all of this zone. Then you can get in on this trade to sell below. If price breaks below here, wait for this zone. Price will come here and then you can get to sell down below. So that's just a recap of the model on market structure that we want to wait for. So when price is bullish, we are selling only at these higher lows. We are buying at the higher lows rather. Then we sell at the lower highs when price is bearish. So these are the model formation that we trade that makes us smart traders. Is that okay? So let me get feedback if maybe you have questions to ask in respect to this structure that I just explained here before we can begin to build on it. Anyone having question respect to this, what I just explained now? You can unmute and good evening, welcome.
I have a question.
All right.
Is there a particular time frame where you do this analysis before going to lower time frame to take an entry?
Yes, the time frame we use is higher time frame. And as I said, on synthetic, daily and 4 hours is okay. That's what I refer to
Which
as
of the
my higher
particular?
time frame. Daily and 4 hours.
Which time frame?
This is daily.
Okay, thank you, sir.
This is daily. That's 24 hours. And then we have 4 hours. These are my higher time frame on synthetic. Is that okay?
Yes, sir. Thank you.
Then my lower time frames on synthetic is 30 minutes and 15 minutes. 30 minutes, 15 minutes. That's fine. That's what I consider as my lower time frame. Yeah, 5 minutes is cool, but most of the times you wouldn't be there when 5 minutes plays out. So most times I just look at 15 minutes, get in on 15 minutes. If you see 5 minutes, it's fine. I've taught all of that I've taught most of those things on the mentorship, even in the free group. I've showed 5 minutes entry, not once, not twice, many times. So, but 15 minutes is fine. If it's a 4 hours point of interest, that's if you want to buy from here and price comes back on the daily, you get a 15 minutes, that's fine. 4 hours, that's fine. Get a 15 minutes, that's okay. To get a daily point of interest, if you get 1 hour, 30 minutes, that's fine. That's okay. So you can look to get in. This is when price is changing from bullish momentum to a bearish momentum. Now, if price is changing from a bearish momentum to a bullish momentum, price will do the same thing. Until price break above these last lower highs, it's not a break of structure. So you have to allow price to break above here. So this becomes your break of structure or break in market structure. Then price will come back inside to retest either the order block or the institutional candle that is here. Then price will now start giving you a bearish momentum. Price will start giving you a bearish momentum. Okay. Yeah. All right, so price will start giving you this bearish momentum, and then you see price giving you something like this. Yeah. So this becomes your break in market structure. What this thing means is that it's giving you a signal that price has changed direction. You shouldn't be looking for selling opportunities again. Just look for buying opportunities. So you have to wait for price to return back to all of these other block that is here. Price will come back to the other block, and then you can take your entry on the other block. It is when price comes to this place, you want to look for lower time frame entry. When price returns here, then you want to look for lower time frame entry. Is that okay now? Not when price is here. Price just gave a break in market structure. Let price come back here. Then you go to a lower time frame entry to look for entry here. So if this is a daily point of interest, that's after market has broken, this is where you are now looking to buy on the daily. Just go to 1 hour, 30 minutes. You can get an entry on this point, this place. So permit me, let me send this to the group. Might be interested. We can just put it for study purpose. Yeah, for study purpose. Okay. All right, I've sent this screenshot to the group right now. All right, let's can we go to the chat now?
Yes.
All right, let's go to the chat. Let's just look at one or two things. For the mentorship team, we'll be having call. I have a general call tomorrow. And then for the mentorship team, we might have a pre-London session. So, but let's just have the general call tomorrow first. Let's have that call tomorrow first. All right. This is Crash 1000. or if you have any. All right, for this call, let's just use 25 first. For this call, let me use.
Okay, sir.
Let me use VIX 25 for this call. Let's use VIX 25 for the call. Okay, this is VIX 25. Please just ignore anything you see on my chart. I'm going to remove everything right now. Okay, so let's just start the general analysis together. Ignore. Yes, I need your help. All right, so let's see. This is my daily time frame, which is 24 hours. You can see how that price has been bullish, like super bullish. You can see it. Okay, so I said that when price is bullish, this is what price will be giving to you. Price gives a low, price gives a higher high, give a higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Are we following?
Yes.
Higher high. Now price has come for a higher low. Is the structure clear enough? This is what 25 has been given to us for ages, like for a very long time. You can see that how price gives us this low, started from this low, but price had to break all of this. Price broke this, came back, retested. When price created this side, price needed to come back inside. Where did price come back into? This other block. So while waiting for price, if you go to a lower time frame, you will see entry here. That one is short. Price created this high, created this high. Once the high is created, price have to come to the last low. This was the last low. So price came back to this last low. Price created this low and price created this high. Price didn't come back to this side. Price just came into this IPA that is here and created this high. When price created this high, price came back to all of this low. Price came back to this low. Price came, created this high. Price will need to come back to the low. And that was the low that price came back to. That was the low. That was the low that price came. All of this was the low. This was the last low that was created. Price traded back into it somehow. Though it took days, all this chubbiness and all of that, but price did find its way to this low. Let me put it on line charts. You see, price came back to the low. When price created all of this high, we had this low that was here. All of this low. Price needed to come back to it. After all of this push up, price came back here. And you can find there was an order block here, there was an IPA here, right? There was an IPA here that price came into. And if you go to a lower time frame, you see that distribution. Sorry, the accumulation was here and price left. After price came, closed above this high, price created this high. Price came back to all of this. This was a cube that price came into. Now, after this was the last low created. Price came and created this high. So right now, price needed to come back to all of this low. And that's what is happening right now. Price came to this low, this last low created. So you see price is going back. So this buy opportunity should take this high out. So by structure, we are still bullish. All right, by structure, we are still bullish. So let me clean up this place so that we can use this for our analysis. After price created this low, This was the high, the low, the high. Now price has come for the low to push higher. Is that okay? Since this is a daily time frame, you can go to that 1 hour or 30 minutes to get a lower time frame entry here. And this is what I sent out, I think, earlier today. So let's go to the 1 hour. Let's start from the 1 hour. Let's see how that price came back into this zone that we're looking for. This was the zone. Now price is back here. So we come to 1 hour. This is 1 hour. I'll zoom out so that it will be very clear. You see it's very clear. We had this call before, and I think many persons got on this call, like many. What are you going to be waiting for here? Was it this place I used for? Okay, fine. What are we going to wait for if price is coming down and you want to buy? You have to allow price to break a structural point first. Then price will come down to the other block, which is most of the times either the last candle or imbalance or cube or institutional play, whatever institutional play that is now here after price has broken structure. That's what you want to look out to play. So check how that when price was selling, look at how price was coming down in this movement. Look at it. High. Okay, this was the low. This was the high. Look at it. The high, price gave a low, price gave a high, price gave a low, price came, and price broke above this structural point, right? That was the break in market structure. Price broke above this structural point, Can you see that now?
Yes.
Price broke above this structural point. So this is my break in market structure. Break in market structure. Let me put it at the middle. So price has broken structure. Now, what is available in this place that you should play? Because now you have idea that price will still come back inside before price will start shooting higher. All right. So from here, what can you find? You can see how that all this choppiness happened and price came and cleared all of this liquidity, like all of this liquidity were swept. All of this liquidity were swept, and there was an order block, which is this last candle before the break in market structure. That's the last candle before the break in market structure. And to tell you that this candle is valid, what can you find? It's an IPA. I've always told you, IPA tells you that the order block is valid. An IPA tells you that an order block is valid. So that was the IPA. So even if you had entered off this IPA, fine. You had entered here, fine. Let's say you had entered on the open of the candle of 50%. Now stop loss will determine to the low. That was just 10 pips. So why do you want to wait for? Because there was a 5 minutes break of structure here. You can see it. But if you had entered on this, you'd have been on this trade. You had played 50% of this candle, fine. But this 1 hour, it's very okay. Now, if we look at this retracement, when price was retracing, it's the same market structure. Look at it. A high, a low, a high, a low. Maybe I should take it to 5 minutes. A low, a high, a high, a low, a high. Price closed above this zone. Is that correct?
Yes. And then
You see how that this candle closed above this zone. Price will now have to come back to either this last candle that was here or the IPA. So let me go to, I think I'll prefer, let me go to a much lower time frame.
15 minutes.
So that we'll see this movement that came down. And let's go to a much lower time frame. When price was coming back for your entry, when price was coming back, oh sorry. When price was coming back, what can you find for the retracement? Price was coming to this candle this whole other block. Price was coming here. I think it's very, very clear. You see, this was a high. Let me use this so that you can see it clearly. High, this was a low. Price pushed up, price expanded. Price pushed up, price expanded. Price pushed up. Price did what? Expanded. Price pushed up, expanded, pushed up, expanded, and price changed direction. Price is already going higher, and price were closed above this place. Is that correct? Then price needed to come back inside, and price left. So if you had looked at the 15 minutes, I would like to remove all of this now so that we can see the candles clearly. So if you had waited on 15 minutes, this was a break of structure that confirms that we really want to buy. Price is really going to be bullish. So this is my break in market structure. Price is really going to be bullish. Now price has broken structure in that your 1 hour point of interest, right? So what are you expecting? Just play this last sell candle, this last sell candle. You can see IPA there. This last sell candle is fine. That was the last sell candle before this buy. The open of it is very clean, like very clean. Open of it is very clean. And that would have given you the entry for this trade. Just the open of the candle would have been fine. Yeah, open of the candle would have been all right. Stop loss here. And then you know the principle. First, a 1 to 3, right? First, you want to take a 1 to 3. So that's a 1 to 3. Price got there beautifully. Okay. And price started buying since then. Next, after 1 to 3 is this high. So let's go to H1. Next, after 1 to 3 is the high that led to the break of structure. So this was the high that led to the break of structure. That's the next to take price from. This is the last high. So next take profit is here. And that's around a 1 to 6. Yeah, 1 to 6. That's the next take profit, 1 to 6. And price has been pushing up since. Like where price currently is a 1 to 9. So if you had risked $1, you make $9 on this. You had risked $5, you made about 45 or thereabouts. So that's just how you want to allow price to break structure first. This is where many of us will miss the price should break the structure, signaling that I truly want to buy. The buy trend is confirmed. Like price will have to break this structure if it wants to sell, break the last lows that was created before the high. Price broke it, price came back. Now price wants to buy, price broke this last structural point. First, price will need to break to confirm that, yes, I truly want to buy, or price broke it, came back. Price broke structure, came back. When price came back, where was my target? This last candle. You see how it cleared all this chubbiness. And then when price came to that last candle, you see what price did again? Price gave you another break of structure, like another break of structure. It was clear. Price broke again up. Tell you, okay. So that's why you are not going to be, all right, okay, I might miss the trade or not. If price break, just be patient. Allow price to come back. Set your limit and just go. Price came, boom. And that was the trade. We spoke about this trade in the last call we had, still on this group. Yeah, because this is my resources. Just have calls here once in a while. I send my markups here, just like that. So right now we're expecting that this trade should keep going up because by daily structure, we have come to the lows. So where are we targeting? This high. So you're on this trade, you hold to this high. That will give you like a 1 to 28.
That's massive.
That's a 1 to 28. Yeah, some persons are still on this trade in this group, on this call. Yes, some persons are on this trade. on this call. When we called it out, they took the trade, but so that's just it. That's just it. Any question before I would like to stop the recording so that we can look at other assets and analyze other assets. So any question in respect to what you are seeing? Mr. Isaac, get set. So you are going to also share your screen. Let's look at jump asset. We'll look at jump asset together. So you have question, let me know. Let me know.
Hello.
All right.
So me,
I have a
it's okay, sir. I think it's clear.
Very,
It's
very
okay.
clear. It's very clear.
All right.
That was my trade yesterday.
Yes, Jelly Pat, you have a question. Go ahead.
Hello, sir.
All right. Mama, I can hear you.
Please, I need you to help me expand, zoom out the candles for me to be able to identify the IP candle. I'm not clear. Just hearing it for the first
on 1 hour or
I really don't. Let me just know. Just clear. Let me have a clear look on
okay, let
what
me zoom them out. Let me zoom them out. Let me zoom them out. So let me remove this. Okay. Is it zoomed enough? Can you?
Yeah.
Or should I change the colors I'm using?
Hello?
Yeah, I can hear you. Go ahead.
Yeah, I said I need you to kindly explain to me what
Okay.
looks like.
All
What
right. I'm actually calling order block or institutional candles.
All right.
IPA is this inefficiency you can see here. Inefficiencies. That's IPA like this. This is an inefficiency. Okay. That's IPA. If you hear of IPA, that's inefficiency or imbalance.
All right.
Like all these places where you don't have wicks. Yes, fair value gap. You have only this kind of candle now. There is no wick to both sides. That's imbalance. That's inefficiency. That's fair value gap. So let me recap. First, you want to find your structure on the daily. And as you can see on this asset, we have been bullish because price has been giving us higher highs and higher low. Why is this a higher high? Because it's higher than the previous high. This is a higher low because although it is high, if you compare it to this low, it is a higher low. It is higher than this low. So this is a higher low, higher high. This is a higher high. This is a higher low. Price came back to this Q. Then price pushed higher and gave us a higher high. So what are we expecting? We're expecting a higher low, and we buy only at the higher lows. We buy only at the higher lows. So when price was created this higher high, price is going to retrace. So you want to wait at this higher low for your buying opportunities. So price comes here by, created another higher high. Once a higher high has been created, which is higher than the previous high, this place that was your entry becomes another entry. So this now becomes another entry. So you want to wait for price. Price will come here someday. So what did you see? Price came here after price broke structure. Because price moves at liquidity zones, from liquidity to liquidity, price cleared this, breaking structure, but price respected this higher low and then pushed up to retest. So it is now, after this break of structure, you want to start looking for selling opportunities. When price is still bullish, you are looking for only buying opportunities at the higher lows. At the higher lows only. Higher highs, higher lows. You enter a buy from here. Take profit here. Price went up for this, came back again. You enter a buy from here. take profit here. Price came. You expected price to come here. Price didn't come here. Rather, price pushed higher and broke structure. When price is returning back, this place is still valid. So you buy from here up, retest, and then price starts selling down. You now want to sell down from here. Price has changed direction. It has changed momentum. So it's telling you, all right, I'm ready to start selling right now. So that's the same thing you can see here. Price, after creating all this high, price had to come back to this zone. So I prefer to inbox everything. Just inbox this last push down and then wait for price there. So when price came in here, price is now at this zone. What do? Go to 1 hour or 30 minutes. Like I said, 1 hour or 30 minutes. Now begin to look for another break of structure at that zone. Another break of structure at that zone. So price comes back to this place. This is what you need to wait for. Price will give you something like this, another break of structure at this zone. Then you can now start. Price will give you another break of structure in this zone, in this zone. That's it. Price came here, broke this structure, like we can see. So I know price will come back inside. Now, when price is coming back inside, you now want to look for where price is coming to. There's an IPA here. Inefficiency is here, an imbalance or fair value gap. It's an indication that there is an order block in this area. So price filled the IPA. Price can come to the IPA and just go. Yeah, it's still a smart money play. So price came to the IPA, filled it completely, came to this order block, which is the last candle that resulted to this push up. It was this last candle that created this IPA. The price came to that candle. Price gave you another break of structure, right? You can see how the price created this high, this low, this high, this low, this candle. 2 consecutive candles went to close above. Then price will need to come back here. If I go back to 1 minute or 2 minutes, you see another break of structure here on either 2 minutes, 3 minutes, 5 minutes. I'm sure. Can we check that? Let's check that. So let me put this one. Which color should I use for this? No. All right, let me remove this one. Okay, so let's go and check this ash color when price came back. Let's check 5 minutes if we had anything on price in this zone. Okay, now this was it. Price was back to that zone. Price was back to that zone. 5 minutes is not giving you any play, but I think there's a 3 minutes play. After price broke all of this, you can see price came back to the IP after price broke this structure. This was another entry that I've got in here. Price went up, created the high. Here becomes a valid entry. This is the places Mr. Salmon like to play, Come back here, entry at this place. Yes, he's very expert in playing this place, so just get in here.
So, Mr. Salmon.
Let's check 3 minutes if there was something here. Let's check 3 minutes. Yeah, I can get that. It's not so long. All right, 3 minutes. Let's see. Okay. All right, this is 3 minutes. So what can you find on 3 minutes? Price gave this break of structure. High, low, a high, a low. This candle closed below. All right. Whose mic is that? I'm going to mute you.
Mr. Salmon.
Okay, let me mute him for now. All right, so you can see how that this body closed below. So that was a valid low, and price closed above here, 1. Price closed above here, 2. Telling you that, yeah, I really want to turn, and price turned. So this was a 3 minutes break of structure. Now, since this is 3 minutes, if price breaks structure, just play the next push, and this was the next push. You had played this, you see how the price came back in. This was price coming back in. There was no IPA here that price should come into. So this becomes the cube. This becomes the cube that price was coming back to play. So you had played that, or you played this breaker block, that would have been fine. You have just gotten entry on that, and then you just keep going up. Assuming you didn't see this, price started creating that bullish formation. High, low, higher high, higher low, higher high, higher low. Look at it. Higher low, higher high. Price came for the higher low. That was a very sweet entry, like sweet entry. So you are getting on this first 1 to 3. So at this top here, you have already gotten 1 to 3, like salmon, and you run away. I used to like the guy. You just catch it and run away.
It's smart in that area. Very, very smart.
Yeah, he's very good in playing lower time frames. Like he has trained himself on that. So I think that's just basically what it is. I've gotten on this trade. Okay, to where price is now? Let me use 1 hour. To where price is now? I've gotten it more than a 1 to 14, if I'm mistaken. A 1 to 12, 1 to 20. Where price is currently? That's a 1 to 20. All right. I will need to stop this. Thank you guys.